What's up, guys? Welcome back to another week of video for the week of April 11. I think this week is gonna be good. We have the CPI, and then we have the bank earning. So I think the market gonna move. Unlike last week, I mean, the last week we did move somewhat, but it's not significant. But this week, I think we will. So on Tuesday, I think that's the main thing for this week is the CPI, and then maybe a retail sale. PPI, okay, and then we close on Friday, so that's the thing. And then we have the jump start of the bank earning. So I think that is something to looking forward to. The nice thing about the thing is that the bank earning comes after the CPI, so that's the thing. And then we have a bunch of other earnings, whatever. We're gonna go over that in the chart, okay? But right now, at this point, the certainty, the Fed, we still have the Fed right now. At this point, I don't think the market is pricing in the Fed going to be increasing the rate into 0.5 or 0.7%. I don't think they believe it until it's going to happen. So that we have to wait until May 4th, I guess. So that is right now, I guess it's going to be okay. Well, it's depend to the CPI. If the CPI come out like high above expectation, that would be a problem. That's going to be, cementing that the Fed definitely going to increase the interest rate, right? So that's one thing to see, right? So right now, this week, I guess, is very important. Like that's why I believe this is going to be make it or break it. And then second thing is Putin. I mean, the Ukraine and the Russian war, right? So at this point, I don't know whether or not Putin gonna escalate. It's still a big question. At this point, I think they're just gonna try to see who gonna last. And if that what they do, I think we won't gonna get a lot of reaction from it. But if Putin escalate, then we're gonna definitely react. So at this point, like everything is news driven. This market is based on news driven at this point. So you just have to watch day by day. And then China right now, you know, we'll see how it is because right now at this point, COVID, I'm not sure how big of an issue is it, but it seems like it's a big thing right now. It's surging on Monday, and then like new cases, and then I believe they started to lock down new city now. So I don't know how bad that is really. And then the only thing is that they locked down the port, so that like supply chain issue, right? And then also demand for stuff, so global economy and all that thing. So I'm not sure how going to display. And then the economy wasn't doing well on the first place. This, doesn't help, especially with the Evergrande situation. We don't even know what happened to it. Everything just forgot for like a few months now, and it seemed like nothing happened. And then all of a sudden, COVID is just breaking out everywhere in China, which is weird. So at this point, China, I guess, is something to look into, but I think we not going to have too much reaction to it yet, unless COVID start maybe mutating or whatever. So at this point, I mean, China and COVID is at this point is on watch, and then inflation. I mean, that is another issue, right? But CPI gonna give us a clear view of what's going on at this point. So right now, consensus I think is 8.5, which is really high because the last reading was 7.9. So this is increasing to 8.5. Whether or not we overshoot, I don't know. I mean, this is high, but the thing is like the CPI for this month will be including the increase in gas prices. So that's the thing. So it might overshoot, but I don't know. I don't believe this number, and they could change or they do whatever they want to do with this number. So it's depend. Unless they want to side with the Fed that's guarantee gonna increase rate, and then they could just manipulate the number and put the overshoot. So at this point, that what I see. Yeah. So basically, I guess that's something to look forward to for next week. So just let's get into the chart, okay? And we'll see what happened here. Yeah, just let's go to the chart. So SPI, right? So the SPY, I'm sorry. So Monday, I think Monday we popped because of up Elon, but then we pulled down. We didn't pull down much, right? We pulled that down. The dot line is a 20-day moving average, and then the 200-day. So I mean, we like close right at the 200-day. So at this point, I mean, this pullback is not that significant. I think it's like 38% based on the Fibonacci right now. So 38%. So I mean, at this point, it's still very bullish. You know, nothing is wrong with this structure because it did make a high here. So that's the thing. So right now, I think we're gonna go sideways. Monday, we might, if there is no like significant news, I think Monday nothing gonna happen, and then Tuesday, that's where the CPI come out, and that gonna determine. And after that, depend how bad or how good it is. I think it's gonna affect the bank too, the CPI, and then we'll see how well the bank do after that, and that may save if the CPI is bad, then we might could go down. At this point, like there's certain level, right? So right now, I mean, this is the dynamic support right here, and then also 100-day moving average. So like 441 is the level you have to watch, right? So if it's go below that, I think it's still not a problem because right here we do have the upper trend line, right? So basically, unless it's breaking down everything, then it's bad. But at this point, I think it's still very bullish. And then I don't think the bank gonna do bad, to be honest. I think the bank is gonna do okay or decent because I don't see anything yet because the yield curve just started inverted like this few weeks, like this past week or so. So it should not have any problem with the lending issue right at this point. So I think they're gonna do well for this quarter, but the next quarter, that's questionable. So depend on the forecast for the bank. But the bank does they do like the technical as we go through it, they don't look too good. So at this point, so I mean, right now we are still very bullish. We make a high, and then right now we're waiting to see where the pullback is. But right now, the structure for this, we have the uptrend line support here, and then unless we pull that all the way down here, then it's bad. But I don't see a point yet, unless like the CPI come out like 10 or something, above expectation, like 8.5, and we come out 10. I think that would be crazy. Then that will definitely drive this down. But we'll see. That's all dependent on the number. But right now, I think we might, if anything, we might make a high. If like the CPI doing okay and the bank is gonna do well, we're gonna go up and make a high. So basically, this is just a temporary pullback, and then we're gonna move up. And the only thing is right here, this line right here, we might have some resistance up here at this point. All right, so around 470 we will see. And then also right here is an invert head and shoulder too, if you see it, right? Shoulder, head, and then if we go down, this is shoulder again, and if we move up, that the shoulder. So that is a bullish formation right now, the way it looks. So we will see. So I'm assuming if everything going well, we're gonna make a high. So that's something to look at this chart right now. That's what I see. The volume for the selling right here is very low, so it's not that bad at all. So it's not significant. Like people are not taking profit at this point. They still hold pretty good. Okay, so that's the SPY. Then we go to the QQQ. QQQ it's not doing as well as the CPI. As already went down to this level. But I mean, it's still very decent because the pullback here, I didn't do the Fibonacci retracement. This is probably 38% pullback, so it's still pretty good. All right. Let's see IWM. IWM, however, this is kind of bad. They pull up here, retest this resistance, and then it fell. It pulled back, and then it's already came down to this. This uptrend line here, which is weak, and then fell to move above this downtrend line, the main primary downtrend line. So this is a leading indicator, and plus this is the growth sector, right? A lot of these stock growth stock, and if anything, it should be moving up, but it's not. So I mean, this is signaling something here, but at this point, it's not significant yet. Let me see. The next one is the Dow Jones. Dow Jones at this point right now, I mean, it looked a little bit stronger than the SPY. You know, it pulled down, it stay outside here, but the thing is still below the 200-day moving average, the red line. Okay, so at this point we will see, but it's doing fairly decent compared to the Nasdaq. All right, and then Dow Jones. This one is bad. I'm not sure what's going on, but this is a huge diversion here, right? From last week, and then this week continue, and now we going sideways. Are we setting up for a bear flag right here? Because, you know, we came back all the way to this downtrend line here. It is support for now, but if it goes sideways and start moving back up, it might make another low, and that is going to be a problem. I'm not sure what's going on at this point, but this signaling something. This is definitely something to watch for. So I think this is definitely have to be on look and see how it's going on, how everything is at this point. So this is significant. The VIX, I mean, the VIX is it might depend. Well, we'll see. It might could make no low. Depend how the CPI going to go out. But right now is holding support. It could go up, continue to go up, right? That's going to be a higher low, but we'll see where it's going to go. As right now, it's not significant. The TLT, I think it's going to bounce. So that's the thing. Like, it's down. It's this channel right now at this point. It is kind of low at this point. I haven't drawn out. Oh, it passes support too. So yeah, we will see. I'm expecting a bounce at this point. Like I say, next week might be good. We might have a good CPI, and then the bank gonna do well, and everything gonna be rosy again. Okay, the next one, junk bond right here. Junk bond is already telling the interest rate is gonna move. They're not doing well. So I mean, this also a signal. The dollar, look, dollar just broke out to new high here, so that's one thing. So it's signaling, you know, we are strong at this point. So I mean, one thing I see here at this point, beside the dollar, I think gold. Gold I think might be the play here for inflation. If we have the CPI is high and stuff, possible this gonna move, because it did go down here. It kind of like put a low, but like insignificantly. The only thing is that the volume was like pretty low. So right now it's like, you know, double bottom maybe, and then it move back up here, which is might, if the CPI come out. I mean, even if the CPI come out as expected, it's still high, 8.5. So I think gold might move next week. I think this might be the play here, something for you to look at. So you could put in, I mean, I'm not a financial advisor, but this looks good from the technical point, and then we also have a catalyst into this, the CPI. Like, I'm not expecting it to be low. If anything, I think expecting match expectation or high. Okay, but I don't expect it to be lower than 8.5. So that's what I'm thinking. So do whatever you must. You know, I'm no financial advisor, but I think I want to put in a play for this, because I think it's probably going to go back up here. We will see, but the way the setup right now is very bullish to me. It's very similar to wheat, if you could see wheat, if you're watching that. So very similar setup right now at this point. Okay, so just so you know, that's, I believe next week that might be the play for, I'm thinking. Silver is not that strong, but silver does broke out of the primary downtrend line here, and then, you know, it's pulled back to this secondary downtrend line, and then it's kind of sideways a little bit. So I mean, I would probably play gold instead of silver, but silver does signal a bullish move also. Oil, however, look a little bit weak, but not significant at this point. I mean, it kind of broke down below this uptrend line here, but like, we did a lot. They did a lot of stuff to, like, you know, the lockdown on in China. You know, we released a lot of oil from reserve and all that stuff, and then oil didn't really move that much, right? It didn't make a low here. So I mean, at this point, it just sideways consolidating down. Like, basically it's a down channel right now. It's kind of bullish to me. It's just the only problem, I think, I'm having with this is that it's kind of like it went below the uptrend line here, but still it hold this 50-day support right now. And man, is technically is not broken. So I mean the uptrend is still intact at this point. So I mean I don't know how what the catalyst gonna be at this point for the oil to move up. If Russia escalate, I think that gonna help with that. But at this point, I'm not sure what will be the catalyst. Something have to happen. We need a catalyst if you want oil to move up. So at this point, this might be a long sideway consolidation before it move. That's what I see. Next one, we have financial here. Financial didn't do so well. I guess because of the yield curve. You know, they long the short because the yield curve inverted, right? So I mean the short-term loan, they long short-term, they borrow short-term and they lend out long-term, right? So that kind of affect, I guess, the lending process. Okay, so I guess that's why it's down. That's the only thing I'm assuming. I mean, if it's in a recession, I mean, the signal recession, and if we are going to recession, then the bank is not doing well. But at this point, I mean, the XOF, I mean, it has to make a low. It did pull back here. This, I think, is 61% maybe pull back. So I mean, it's still somewhat bullish. It's just it's below all these trend lines. So it just have a lot of resistance for it to move up higher. But at this point, I see we might still do well in the bank. The bank, this earning will do well, but the following earning is questionable. So right now, that's something to look at also. Okay, so we have energy here. Energy is about to break out to a newer high. Will it be? I think it's possible. Like I said, we need a catalyst. I'm not sure what the catalyst is right now. Like I said, just something like oil, but we need something. And then we have the utility sector, which I think at this point, I think is kind of extended. If anything, I might do a short for this. It's way too extended for utilities should not doing that great. Okay, and then if you do the technical, right, look at that. You know, it's measure move, right? So it's kind of like reached the expectation point right now. So I mean, I don't think it's had much more to go before it moved down. So that's something also for you to play. I think is a possibility to short this play to go into in here, but I'm not sure what the catalyst for it to go down. Beside the technical is kind of extended. I think this play is like it's too crowded at this point. That's what I'm thinking. Okay, the volume is actually pretty decent. This up here to this point. We'll see if we're gonna put up anything, but this shorting utility is possible a play. And then we have the semiconductor. Semiconductor is not doing too well compared to the NASDAQ, the tech sector itself. So it's pulled back all the way here. So that is a weakness also. We'll see how much it's going to bounce, but I don't see, I mean, with all this shortage and all this problem right now, they might not. And then the demand, I'm not sure how much demand we're going to have. That's another thing. So at this point, it looks weak. Okay, and then the healthcare sector just make new a high here. I'm expecting it to pull back too because it's just climbed all the way up to this new high and put in new high right now. I mean the volume is decent, but at this point, it's also reached this channel right up the channel. So I mean we might consolidate sideways. I think that if you want to be bullish, I would consider this consolidate sideways, put a bull flag, and then move up again. See, and then they did come back to this like long-term trend line here. Well, semi-long-term trend line. So went above that again. So right now, I mean, it's still bullish for the healthcare, and all the healthcare stock with good dividends has been moving since last week. All right, okay, this one is Euro sector. I mean, they're all pulling back right now, slowly, you know, but they're trying to test this point. They didn't even reach this resistance here, but they already pull back. And then make a lower low here at this point. We'll see how it's going to continue to move. But this, I think, is going to be like maybe 3 to 6 months from now. So if anything you want to do, I would expect maybe at least September to October or longer to the end of the year. I think that's how you should strategize this play. Okay, Apple. I mean, at this point, Apple is looking real good right now. You know, pullback maybe this like 23% pullback. So I mean, at this unless Apple doing bad in the earning ahead, then we might have the SPY might have some problem. But like these big tech sector, man, these big guys, they doing well. Tesla too. You know, at this point, I'm not sure how to pull back. I just kind of feel this gap here, so it's better move back up or depend. But right now, the setup is still very bullish the way it is right now. Microsoft, let me see. Microsoft, a little bit soft, no pun intended. Anyway, yeah, but it's still decent. I mean, the pullback and stuff, it kind of went below this support level here, but I don't think it's a bad thing if we draw this. Yeah, we'll see. It's not too bad. Google blew back like 50%. Wow. Okay, we'll see how it's go. But it's still, I mean, it's still very similar chart to the SPY. Amazon here to pull back, but Amazon, man, that might be some headwind here. We have like a union, and then you know this is still discretionary spending, right? So that's something to watch. Nvidia pullback, feel heavy. It's pulled back to the primary downtrend line now. We'll see it gonna hold support or whether it go sideways and go down. I mean, this is a significant pullback. I think this is more than 61%. So that's something to watch. I mean, as it is, you know, if the Fed decides to increase rate, they're not gonna do well. Facebook, forget about Facebook. Okay, and then let's go to the earning here. KMY. This one, I mean, it looked bullish, but I'm not sure people buying car or not. So CarMax, at this point, I mean, it has a long way down too. So at this point, if anything, this thing move big. It can move big. So look at the earning, previous earning here, big candle. If anything, this setup, it could move up or move down. I think you could do like a straddle. So that's something to think about if you want to set it up. JP Morgan, I think that's the first bank. They're going to come out on Wednesday, so right after the CPI. So, I mean, this doesn't look too strong. I mean, most of the bank or like the technical looks bad. So I'm not sure how well they do. This like JP Morgan is is an investment bank, so a little bit different than other one at this point. So right now, I mean, if you could set this up, then you play. But if you can't, I'll wait after the result. And the bank doesn't move much either, so that's another thing. Ooh, BlackRock. Why did I put this in here? I mean, BlackRock is also earning, but it looks very similar. It looks stronger than the JP Morgan. I mean, it's something I would just wait. And then we have Delta Airline here. Look, Delta Airline went back up, testing this uptrend line, and then it's pulled back already. So at this point, I'm not sure how well this is going to be doing. Like right now, they say the demand for flight is high, but I mean, it's kind of still tough to go out of the country. I mean, within the country, I guess it's fine, but how much money people have right now to spend extra? I mean, if you look at the spending cut, I think there's a report that like the middle class already cutting back spending. So I mean, this might do well for this report, but the projection wise for the next quarter, I'm not sure how well it is. So the that's something to watch. I mean, it could do well because people start to travel again, because of the ease in traveling and all that stuff. But right now, I think this quarter they might do well, but the next quarter, so the forecast for next quarter might be bad. And then if they cut forecast, this thing gonna tank. So right now, I mean, I'm more of the downside for this stock. And then look at the primary downtrend line. They try to break out and then they pull back really bad. And at this point, they test this thing. I mean, if anything, I would be like bearish on this one. So, do what you must. This one, as bearish as it's gonna get, but I'm not sure. Like this was some changes for this, right? I'm not sure what was it, but I wouldn't play this. I'm just gonna wait. Fastenal, right? Housing right now is not doing well. I'm not sure if this is gonna do well. Home Depot low. I mean, this part of it. Construction right now. So it went back all the way up here. This move is really high, right? This move is like it was like really bullish, and then it tests this resistance here, and then it's already pulled back, and it's broke this uptrend line. So at this point, I mean, if anything, I would probably play the downside compared to the upside. How much upside I'm gonna have for this, right? I mean, still up here, but I think there's more headwind to the housing, and this is a construction related. So if anything, I would play, maybe I'll play our long term, like a long, instead of playing the short term for the earning, maybe play out on a longer term line, right? And yeah, and I guess that would be helpful if you do play out long, because if they do well, they might move up here, but I don't think they're gonna move that good. So the upside is limited at this point compared to the downside. So I think the risk for is better risk and reward for you to do play the downside. So that's what I'm thinking. So that might be one of the play I'm gonna try to do. Goldman Sachs looks very bullish, but we will see. At this point, like I said, they might do well because a lot of trading. I'm not sure there's a lot of people trading or not. And then, well, they have their own trading team and all that stuff. This is an investment firm, so I mean, this might be bullish. It looked very bullish to me. Like, you know, this is the fallen wedge. So we will see. I put a note in there. I still have a note in there. Okay, so well, Fargo here. It's not that strong. It's already broke the downtrend line here, but we will see. It's all up to the channel. I wouldn't play it ahead. I would just wait. Citigroup though, Citigroup looks bad. I'm not sure why. I mean, I don't know much about these banks, like the difference between one to another, but like I'm not sure why. Citigroup looks horrible on the chart so far, so I wouldn't touch this. All right, TSM, I guess this is one with semiconductor. It looks bad, just like the semiconductor chart. So at this point, I mean, if you want to play the downside, it's a possibility. I mean, I would play that. All right, if you could set it up. Morgan Stanley, yeah, Morgan Stanley, this look bad too. So at this point, it's like it might go sideways and then my tank. So it's all dependent on how the earning go. They come up and test this resistance and then move back, like severely move back. Like unlike the other bank, right? They kind of move back halfway. This one like 100% retracement, and then they pull up. So at this point, I'm not sure what Morgan Stanley is doing. What kind of involvement or what kind of stuff they have, but like this look weak. And then UNH, I mean, if you set it up like last week for all the healthcare play, this would be, you could have like set up for the earning already and don't have to play at all, right? And then we have PNC here. This is regional bank. They're not doing well either, the way the whole setup thing here. So I mean, this might break under this whole trend line, and that's going to be a problem. So I guess that all for the earning next week. I mean, there are more earning for next week, but those are the things that I see. So at this point right now, I mean, the CPI is going to be determined whether or not we're going to be moving up or down at this point. You know, so we will see. And then the bank earning, that if we do bad on the CPI, we do well on the bank earning, that might going to help. But right now, like a lot of this bank doesn't looks good. And then, I mean, Elon, that's another thing right here. Elon, is he gonna buy some lithium battery company? Because on Friday he dropped some kind of news he want to acquire, or want to do some lithium mining himself, right? So that's something to looking forward to, or maybe position yourself to it. Yeah. So basically, right now at this point, I'll just stay on watch, wait for the news to come out, and play the whole thing. But gold, I think, is a possible play, right? Because I don't expect, to be honest, I don't expect the CPI gonna be like under 8.5. It's gonna be somewhere around it or higher. You know, so at this point, if gold is really the inflation hedge, this might be able to play here, and then you could play all the way up here. So anyway, I guess that's it for next week. So whatever you do, thanks for watching and good luck. Bye.